Alan, could you just introduce yourself to everyone listening, if you could?
Yeah, so my name's Alan Chan, director and founder of ZENRG Finance. ZENRG was founded in November 2012, so it's been almost 10 years in the making. So I myself being a banker previous to be a mortgage broker, I was starting ZENRG, and I've been doing that since I was a graduate, so that's over 15 years. So ZENRG's grown from a little mortgage broker to now a group of mortgage brokers with the philosophy of we grow with you, and that is making sure that our clients get looked after and just giving them the peace of mind when it comes to finances. So yeah, that's a bit about ZENRG Finance.
Fantastic. Um, so why should someone choose a mortgage broker over a bank?
Yeah, definitely. Mortgage broker understands the client's situation. So you're not treated as a number, Ben. We want to sit down and understand what are your immediate needs, but more importantly, what are your short-term or long-term goals. For example, if you were a first home buyer, of course, the immediate need is to get into a property. So we have to understand your current situation and look at options that are best suited to your current scenario. And we have probably over 20 lenders that we can compare, not only interest rates, but based on your financial scenario. It's just a simple one. Some people are like what they call PYG, or earning income called pay as you earn, or you could be self-employed. So it's quite different in terms of the lenders that could be involved. Now, when I say first home buyer, we want to get you into your first home. With could be little or no deposit in some scenarios, but with the short-term and long-term view to how do we pay down that loan fast, if that's one of your objectives, or looking at increasing your investment portfolio down the future. So we're just not one size that fits all. We really take the time to really understand yourself, whereas the banks will probably just look at the immediate need, but later on, if you're looking to get a better rate, you're probably stuck with the lender. We may not talk about it now, but another topic is that's called loyalty tax, or loyalty interest that you're paying. So we may cover that sometime in the future, Ben.
Yeah, cool. So we know how banks make their money. How is it that mortgage brokers make earn their living?
Yeah, sure. I mean, we get paid by the lenders an upfront commission and also a trailing commission for looking after this relationship. You might be thinking, okay, well, why is the bank paying you some money to facilitate the loan? Well, firstly, mortgage brokers are not bound by your business hours usually. We do work weekends at times for appointments and so forth. But it's just mortgage brokers is a way to help the lenders, like a marketing channel, right? To talk about their products, features. Brokers are bounded by this law called best interest duty. So it's not like, hey, this is a big four lender that we should be sending business because we're getting the most commission. In fact, it's very similar commissions across the board in terms of an upfront commission and trailing commission. So it is in our best interest to select the scenario that fits for yourself, Ben, or clients. And then we get some upfront commission as a result. So we call it, we get paid based on results.
Fantastic. So what's the process of dealing with a mortgage broker opposed to, say, a bank?
Sure. I mean, in terms of dealing with the banks, you have to probably rock up to the lender or the bank and then book in a time to see them and go through your situation. The only downside is if there's any challenges or hiccups, right? Then you need to explain your situation again with the lender too, right? Or lender three and so forth, right? With a mortgage broker, explaining your situation once. I mean, we can't guarantee approval, but should there be any hiccups or challenges, which is unlikely or very rare, then we got kind of like a backup option with your same scenario and situation. It's quite easy. Mostly now with COVID recently, the lenders have opened up, facilities like Zoom, so it may not have to necessarily be face-to-face. And the IDing requirements, they got the system to verify the identity, which is quite smooth. In fact, it can be a paperless process from end to end with some lenders. So you don't even need to print a form or sign anything because it's virtually signed, Ben. Okay.
Well, okay, that's new. So are there any hidden fees or costs in purchasing a property that most people wouldn't be aware of?
Sure. I mean, part of our processes is to make sure we educate you or our clients in terms of purchasing a property. What are the upfront costs? And also, as part of the best interest duty, we need to look at the fees and charges with each of the respective lenders. Let's say we have 3 lenders that we're comparing. It will highlight what are their upfront costs, and also some lenders may be having a professional package, which is an ongoing annual fee. These are all disclosed as part of our statement of credit advice before we proceed. And you're more than welcome to ask questions before we even proceed to the transaction. So definitely there's no hidden fees. But of course, you know, as you go down the track, if you're buying property, there's some adjustments towards the end, but that's more like a solicitor's role to educate the clients to make sure they're not overpaying and checking, make sure everything's correct.
So the other thing I know personally is, and friends I know, is the question is always, are we ready to buy a property?
Sure.
How should someone become aware that they are ready to make that commitment? Because it is a huge commitment.
Yeah, definitely. I mean, most of it, well, in terms of the first step, all our brokers are trained to is qualify the client. So asking things like, I mean, there's definitely income questions that we ask, amount of deposit, what type of deposit, is there any assistance from family or other, you know, cash that's hidden down the bed. So we ask a lot of questions to qualify to make sure that we leave no stone unturned. Now, I think that's where we, you know, make a difference to other bankers because we really take the time and spend that 1 hour not only covering that question, but also the education. Because in the bank, I mean, it is a business and some of them are employed. They need to get your loan approved, right?
Yeah, sure.
For a business, we've been established a long time, so we don't necessarily need your deal to make sure there's food and lights on the table, right? We want to make sure we're passionate about and qualifying that process to make sure, Ben, hey, we exhausted all avenues. We looked at over 20 different lenders. And yes, we can either do this transaction or no, we need XYZ as a strategy to kind of improve your situation. And often, you know, obviously 80% would know that they're ready to buy after our interview questions. However, the basket that may not be ready now doesn't mean, hey, it's forgotten, because we have many clients in that basket, which if you like 6 months or even a year later, the situation has changed, they come back. And then again, as a result of those questions, we facilitated a home loan with them. So I think don't be afraid to ask. I think that's the key. But also taking on that feedback. If it's not ready, doesn't mean it's a no in the future. It just means at this stage, it may not be worth it to apply and put a credit inquiry on your file. But, you know, these are the factors to work on so we can improve your situation. Okay.
I guess some people might be quite naive about what's required. Therefore, going through that process and gaining and be given goals and things to focus on makes things a lot easier.
Yes, definitely. Even on the document capture process, it's taking photo through an app that we use called Easy Docs. So it's just your ID, supporting documents. Because sometimes, Ben, part of our qualifying questions is income, and more often than not, clients will go, I earn X, let's say 100,000, but that's a breakdown of, you know, commissions over time and different bits and pieces. And in fact, until we look at a payslip, it really affects the maximum borrowing capacity, whether it's your first home, refinancing, or the next investment purchase. So I think they may think they know, hey, this is what you need in terms of number, but we go a bit deeper and make sure we give you that clarity. And that's the key thing in anything. We want to see where you're at, so we know where we can take you. Okay.
Okay, fine. Great. So if someone's looking to get into the market, what's the kind of advice you'd get? You know, if they say, hey, look, we want to buy a house in 12 months' time, what advice would you give someone to make sure that they're as prepared as they can be before they come to you?
Well, I think the first thing, I mean, it depends if they're first home, and I'm just talking about first home, Ben. And in the last 24 months, given the pandemic situation, the government's allowed a lot more incentives in the market where there's a first home loan deposit schemes, first homeowners grant, first home buyers assistance. Now I'm rolling off my tongue some of these programs available. Education is a key, doing the research, what you're entitled to. That's number one. Secondly, is a question we normally ask is how much savings have you saved? And then savings is like, yes, I've saved 50 or 100 or whatever the number is. The main important thing is how is that saved? Is that genuinely saved over a period of 3 months? Is it a gift from the parents or a related party? Or is it a sale from a property? Like, these are the clarity that we ask. But don't be disappointed if it's saving that's not genuinely saved. We may ask, I know you're renting. Have you been paying your rent on time? I mean, these are the things that if I was to provide advice before going to mortgage, pay your rent on time in the next 6 months, have a good savings, whether it's from your parents' related party, accessing to some of the deposit. Then the third thing we would ask is definitely your income. Like I said, are you clear on your income? Is it 100K just a base salary? Is it commissions over time? We need to have that clarity on that. But more importantly, after that is looking at some of your liabilities, right? So little did most clients know, like, for example, if you studied and accumulated a bit of HEX, right? HEX or HELP, right? Debt, this can impact the borrowing capacity or accumulation of credit cards. Even though they always say, hey, I paid on time, but the limit is 20 grand, and 20 grand is probably a big dent on the borrowing capacity. Okay.
Yeah, sure.
So, personal loans, car loans, these are what we call bad debt or liabilities that can affect your borrowing capacity. So I think the best thing is book in a time with one of our experts, sit down, see where you're at, and I think that's the best way you can ever do in terms of knowing where you stand. All right.
Yeah, you touched on before the people's personal situations might change the amount of deposit they need. Can you just expand a little bit more on that?
Sure. So deposit, I mean, firstly, the schemes available, the FHLDS or First Home Loan Deposit Scheme, is just having that 5% deposit, and then there's no longer mortgage insurance with the lenders that they work with. So you're literally borrowing 95% of the property amount. Some lenders, or if not most, will require that to be genuinely saved, right? So over a period of 3 months. So it's not like just a lump sum from mom, I've got 5%. Yeah. And also there's some eligibility requirements in that scheme. Are you Australian citizen? Are you single? Are you married? And there's certain thresholds. I mean, we can put a link below. I mean, it's on our website to really find out that clarity, because it can change, right? But in terms of deposit, it's just, the common deposits is you saving up. There's gift from the parents, right? We see inheritances, right? And also it could be sale of some sort of shares, crypto, or some sort of asset, car, right? That can help us facilitate this first home purchase. So, I mean, we will go through that fine questions and see if we can do it, right? I think that's the key idea.
And when you're purchasing, people, I know people can get a little bit nervous. Is there any ways, or what's the best way to insulate or protect myself, or when we're moving forward with the purchase of a home?
Well, again, I don't want to sound like we're selling ourselves, but it's sitting down with a good mortgage broker to really go through that process and journey and education, right? I mean, we do like hundreds of transactions, more than hundreds of transactions a year, right? So we're pretty good in terms of what we do. We've been doing it a long time, but it's more explaining that end-to-end process, because there could be a lot involved, right? I mean, Ben, I know you're in marketing and websites. Of course, if we ask you like some technical stuff on Google, and you'll be straight away, you'll have the answer and the end-to-end process. That's the same with your finances. Like, if you don't do this every day, I don't expect you to know. So therefore, we will take the time to educate. Hey, what's needed first? What do you need to plan? And that's probably the discovery session that we have. And then after we do a fact-finding session, which is your personal information along with what you uploaded, so we can verify, okay, we can actually borrow X amount. Then we're part of our best interest duty. We ask that list of questions and present a list of products, up to 4 different products based on the scenario. and then we select one which we go through with the pre-approval process. So I think all in all, like compared to 5 or 10 years ago, I mean, the government's done well to have a lot more compliance into some mortgage brokers, which is a great thing. Not so much for us because there's a little bit more admin work, but it's well needed to make sure we protect you, and so you're aware what the journey is and where you're at. Okay. And plus, mortgage brokers are free, like I said before, because we get paid by the lender once it settles on an upfront and trailing commission. But in between the process before is no charge, right? At this stage.
Yeah.
Okay. Mm.
So one other thing is, once you purchase your home, would you suggest things? Well, I'm assuming you would want home and contents, housing insurance, but maybe other things like life insurance or incoming protection, things like that.
Yes, we do. And again, part of our best interest duty is to ask those questions, Ben. So, do you have adequate income protection? Do you have adequate life insurance? Do you have adequate, other like trauma or disability, like those sort of insurances in case in the event, touch wood, nothing happens. But if we did, like we spoke about that to mitigate your risk, all the way to your home and contents and house insurance, car insurance, the lot. Even questioning there as part of a bid, do you have a will, right? So most often as couples, they buy a property, which is a great thing and fantastic news. But later on, they find they haven't got a will in place, and they have kids, and touch wood, nothing happens. If it did, what would happen to that property? So it's not a comfortable question that we usually ask, but it's needed. It's part of our duty to make sure that, we don't want a scenario where Ben says, hey, Alan didn't tell me this, right? Or didn't ask. So we've got probably more than 50 questions that we ask, to make sure we cover all those risks. Okay.
And I guess at the moment we're all far more aware of work and employment due to COVID. That two and a half years from beginning to end. I think that a lot of people are far more conscious about how easily your income can vanish in a situation like that now.
Yes, and that's where even later on, I'm sure we talk about. I mean, you're asking a lot about first home buyer, which is the topic of conversation at the moment. Getting a home, given property prices are going up. I think as you have a home, the other thing that we talk about is doing an equity release or cash out is to alleviate some of these buffers. And in fact, I wanted to share a story. One of our clients that we said it's time to do a cash out buffer, whether it's for investment. They didn't end up using that investment, but it's a blessing that they got the cash out from or equity release from their property, because not only one, but both of them ended up not having their jobs, right? So during the pandemic time. So therefore, this buffer helped them go through and move on with that tough situation. But imagine they didn't do that exercise with us. Then they would have had to ring the bank and tell them that, hey, we're affected by COVID. We need to pause our payments. We can't make it in time. And then they could potentially have some sort of a negative impact to their credit rating, right? Which didn't happen for these clients. So what I'm sharing is that we understand there's risks. We just want to make sure that get the money from the banks when you can, right? Or, get some release of equity. So it's doing that mitigants to protect the risk.
Yeah, great. And I always remember hearing saying that you should always buy land because it's the one thing they're not making any more of.
Yeah, well, I think assets, I've learned, really understood the meaning of inflation now, right? We're all impacted by that. And what's inflation? And want to make sure that definition with my kids, like, if you're buying a bottle of milk in 2022, in 10 years time, 2032, it may not cost the same, right? And that inflated cost is what we call inflation. So I guess, that's why there's a rush at the moment for many people to buy assets. So house being an asset, or their first home, or even governments having some programs to encourage that, which is, just understanding whether you can afford it. And I think the other thing, talking to us to make sure that, hey, I understand interest rates are low. So talking about, do we have it as a variable? Do we fix it? Can you manage your repayments if, interest rates continue to go up? These are the conversations quite real when we have it. because it is a 30-year mortgage. It's not like, hey, it is a few $1,000s. This is for the next 30 years. But instead of paying rent, you're paying this repayment. But over time, you build out a thing called equity because you're paying down your debt. And then we can look at your short-term and long-term goals, which is what we're about. Mm-hmm.
And in the end, it's just all about securing your future, isn't it?
Yes, I think so, because people just focus on this immediate goal and just buying house. But I feel in ZENRG, what we do well is understanding the life stages of finance, right? There's life stage in terms of human being, like, being an infant, being a teenager, a young adult, and then, maturity. That goes the same in terms of your financing needs, right? So again, we're focusing a bit more in the beginning stages, which is usually could be a single or young couple. They want to buy their first home. But as we go through the life stage of their finances, they build up an equity. So common questions is, hey, Alan, can you help us with an investment property? We don't do it ourselves, but we've got experts that we can recommend to, and that's to build their investment portfolio, whether it's in their names, in different structures, taxation advice. Again, we've got partners that we can refer to, because that's the next stage, right? You pay off a bit of equity and then you go, is this all there is? Probably there's a bit more. Some clients' short-term and long-term goals is to build some sort of a passive income, get their next investment or multiple investment properties. But the question that we ask further, is it the best in terms of in your names or different accounting structures? And then as we move along and they have a few kids and they build up a portfolio, maybe I want to buy it in different trust structures or in their super, right? So that's the common where we move from the second stage to level 3, which is a bit more sophisticated. We really want to understand your short-term, long-term goals. Do we need to get some equity from properties? And this process could be a 5-year process, could be 10 years, could be 20 years, right?
Yeah.
This is where we need to, as a mortgage broker in ZENRG, revisit with the clients. Minimum is annually to kind of check in. Hey, is the goal still aligned to what you wanted to do? Or has circumstances changed, right? I have a kid, or I have 2 kids, I'm divorced, right? So these common life instances do happen, and then it affects the way that we need finance. So I think we got to see it just like a medical, or as we're aging, right? Or we're growing, there's different needs. And that's what ZENRG is there, and we're there to grow with you. Mm-hmm.
That's fantastic. How has technology changed the way we get along?
Oh, Ben, technology has definitely changed the way that we deal with clients. Definitely, we're on Zoom at the moment. So that's one tool that we use. And then there's other things like, Easy Docs, which is a document upload feature. So no longer is printing paper and sending it through email one by one. It's a secure site, which you take a photo or upload that document. Then we got that access, or our team has access to that to verify and to make sure we provide that clarity. The others are like DocuSign, and then which is a document signing, digitally signing. But of course, there's other platforms that the lenders use. Because there's so much complexity, Ben, nowadays with apps on your phone and these different tools, I feel ZENRG Finance is kind of like your digital shepherds in guiding you along to make sure that at different stages of the process, they kind of go, Ben, hey, he's 1, 2, 3, you need to action steps. But more importantly, these are things you need to watch out for. So just like the banks have rolled out DocuSign, which is, or most of them have, or digital signing, sometimes they, because we do so many applications, we know we can guide you, Ben, hey, make sure you click this. This is going to have a password sent to your phone, right? Just make sure that you fill in here at this spot, because they say, hey, it's easier for the banks, but it's still maybe a complex document that you're signing up. So you need guidance from ZENRG or the brokers to make sure that you're doing the right thing. Or when it comes to the beginning, hey, what's that Zoom link? What do I need to do to book in? Just like how we facilitated this appointment, Ben, you had to click on a link and check my calendar. So it's kind of like that streamlining. Previously, what we had to do is like ring Ben, hey, are you free there? Let me check my calendar. So that's another 5-10 minute job without, much productivity. Now is just educating you, hey, it's a link, what's going to happen? This is what you need to do. So it's a bit more explaining, if that makes sense. Tools help us get quicker, but if without the explaining and guidance or advice, I think even if you had DocuSign or any tool, you may not know how to use it, isn't it? Yeah. So
Well, I think a lot of people who aren't using technology every day in the way, say, yourself and I do, it can become quite daunting. The amount of links and different technologies that are used for one goal, it can become very daunting.
and that's why it's working with you, Ben, to have a bit more how-to videos, or like, break it down. This is a section that you're up to. Have I exhausted all the links? I know I shouldn't be talking about another, Tesla is a company that I love, but in terms of their app, they have a lot of how-to videos and hopefully answers 80 to 90% of the questions. I'm not saying not to call us, and that's not the point, but it's more like, looking at ways to get your problem resolved, basically, right?
Yeah. Give yourself the confidence to tackle these problems as well.
Because I think buying a house, refinancing, or purchasing next investment property is, to some people, maybe a very complex situation. And what we're good at is dissecting it to like 3 parts. And within the first part, then micro action steps that, go through like an exam, it's passed, and then you go to the next stage, right? So I think that's what, like we discussed, the digital shepherding, right? To make sure the clients are, going through that journey a bit more smoother.
Yeah, avoiding any sort of pitfalls that might pop up.
Yeah, correct.
One final question: when you, how long is it until you can refinance your home after you purchase?
Yeah, great question, Ben. Usually with some lenders, they take a 3-month home loan statement to refinance, but the usual standard is the 6 months, right? Because they want to see a bit of track record. Have you been paying on time? What's the repayment history? That's the most important. Some, clients think that if I refinance from lender A to B, and then and it's only been 3 months, does that mean I can't refinance to lender C? Well, as long as lender A and B, you got total 6 months worth of statement and repayment history from these 2 different lenders, we can refinance. And in fact, at the moment, given the pandemic, I know there's some rates that are going up, and that's more like the fixed rates. But refinancing, there's a lot of cashback that's available. Some lenders are offering anywhere from $2,000 up to $4,000 just to have your business, refinance to that new particular lender. So I think it is quite important to understand. It's not like, hey, if it's anything less than 6 months, I would wait. But if you've got 6 months of history, then definitely contact us. If you haven't done so in the last 2 years, I think we really need you to have a look, because paying this loyalty tax with the lenders. But, a suggestion and a tip, if you want to ring up, they will always negotiate. But if they're not giving you something that's sexy or competitive, please speak to us or a mortgage broker that can help you get you a better deal.
Well, you've mentioned that loyalty tax a few times now. Well, can you just go a little bit deeper into that?
Sure. And this is, I think, a great point of difference and unique selling proposition between lenders, banks, or brokers. Why? Let's say bank, Ben went to a bank, 4 years ago, and he's been paying his home loan healthily, on time, and promptly. Sometimes they don't have a program which will proactively call Ben because there's rate adjustments, especially with the pandemic. I think 4 years ago, you would be, I'm just quoting here, just use a round number, it could be 4%, but with the pandemic, it would have dropped at least 1% to, low 3s, if not like mid 2s, right? So they're not contacting their clients, unfortunately, compared to a mortgage broker, which in our best interest, we should be reviewing our clients' home loans every year. Mm-hmm. That sort of difference. And we call Ben and, hey, look, I know you're with lender X, but lender Y is offering this offer. Did you want to change? That's the first question. If your answer is no, I don't want to change, we go back to Ben's lender X to negotiate for a better deal, which 99% or 90% of the time they will say yes, we'll adjust it to the lower rate, right? If they can. If not, the broker will be refinancing it to lender Y, which is a better deal and better interest rate. So I think this is what we call the loyalty tax. I've seen clients which they were so loyal, is a true story, like 10 years with a particular lender, and then they were like a rate that I just fell out of the chair because it was so high. So therefore, I'm just saying that, the clients wanted to stay, but then I said to the client, would the bank refund you the difference of potential savings that you would have got over these 10 years? We both know the answer is no, but that's why you need a mortgage broker on your side to keep them accountable and see, hey, what's the market interest rate that you should be paying? Whether it's with the lender, doesn't matter, or with another lender, but just making sure our clients get a better deal.
So I guess what you're saying there is there's no such thing as a set and forget mortgage.
No, there isn't. I think, like, more importantly, with the technology and pandemic is the review, right? I mean, for us, I mean, you can do it yourself, and we encourage you to. There's a lot of online lenders, but I think mortgage broker, the other thing is having that advice, right? Yes, you can get a cheaper product online and you're doing it yourself. My question is, how much is your time worth? But secondly, do you have the knowledge and the number of clients that we deal with to kind of go, hey, these are what our high net worth clients are doing, or based on your scenario, Ben, you're at this stage, and in order to move to the next stage, these are the action steps that you need to do. So, I mean, lenders, like, if it's online or the bank cannot provide specific advice. For us, it's more just understanding your goals, and we have so many samples, right? Then we can look at, okay, these, not advice, but these are action steps to get to your next objective, if that makes sense. Okay. Yeah,
for sure. And I guess in that regard, it's very, I know my goals 10 years ago are not the goals I have now. So it's very unlikely that someone's goals are going to be the same 30 years apart.
And I think, like, that's the thing, when we do another review, like, your goals may change. I have some clients that they bought a home and they don't want to go down investing and buy another property. So what do? They do the equity release for pool, for renovations and making. So I'm not saying one size fits all, and we're not like pro investment and pro like renovations or any time, but we're just a mortgage broker that really understands your situation, and we do that assessment and say, hey, yes, we can do it, or no, we can't, with a bit of a game plan. What do we need to do to get there? So
yeah, for sure.
Yeah, we're like your coach. I mean, of course, when you're dealing with a mortgage broker, just make sure they're licensed, right? They got the right qualifications. But I think more importantly, I mean, it is more common now. Mortgage brokers can study a diploma to get there. Are they a one-man band? Or I don't mind if they're new, but if they're in a part of an experienced group, that they can leverage that advice and expertise. Because I feel if it's one-man band and they don't have much experience, and let's say they came from a plumbing, like, I'm just using plumbing as an example, or just tradie background, like, they may not have enough precedences or examples to guide the clients along to where they need to be. Whereas us, we've been in banking before, and it's 10 years, so it's like 20-something years now. So it's like really safe to say, hey, at least we know where you're at and where we need to go. So hand to heart that we, looking after you guys, and we can attest through the number of Google reviews on our business.
Yes, it's all very impressive, the amount of 5-star reviews.
Yeah, and I think let the clients speak for themselves rather than, hey, just we're talking about ourselves. But I think, look, we got your best interest at heart, and that's what I really am proud on. And that's where, our business is growing, because it's not there to sell you a mortgage, but really looking at, hey, what do you really need and how do we move forward?
Yeah, fantastic. Well, thanks for your time today, Alan. I really appreciate it. Yeah. And no doubt we'll be back with a second installment, so we can get some of those other investment questions out of the way.
Great. Awesome. All right. Looking forward to it. I'll see you soon.
Thanks, Alan. Bye.